Happy Friday, everybody. It is July 12th, 2024, here at PreciseAlgorithmTrading.com. And wow, the markets have been really, I'm going to call it on fire lately. So, defying gravity, a number of things. But let's dive in, and we'll first talk about our automated trading systems, wrap this up for the week. These are our Dow futures, and it looks like it's been a little stagnant lately. And since I think the 27th being the last time we had a nice pop, which is fine. We've got a lot of stop outs basically since then that really don't add up to a whole lot in the scheme of things, and it make this equity curve go mostly, a little down, but mostly sideways. The Russell, which I talked about either last night or the night before when it made this nice new high. Um, yeah, I'm going to employ this one personally and let it diversify my portfolio a little bit. I just have to decide on timing on when to use it, but it's really nice. These drawdowns aren't terrible, and uh, unless somebody's got a great idea out there, I don't think there's any way to avoid drawdowns, but minimizing them is what I've been working on. So, um, the last time this thing really popped was the 11th, which is yesterday, and that's really when I took note and said, "Boy, that'd be," because um, that would have negated the losses from my other two positions that I keep on all the time. And then we got the Nasdaq today, which actually put in a new equity peak, which is awesome. So we had some drawdowns in the others, and this one actually had some drawdown for the beginning of the day too, starting here. But then you see, boom, you get a nice winning trade right there in the middle that takes it all away and then some, and puts in a new nice equity peak for the day. And now we've gone a little bit sideways since then, and that's how this thing works. And I don't think there's a better example of that. Um, but those things are common, and like I say, in these, well, here, you putter along, you get a couple of little wins, but a lot of really relatively small losses, and then you just get a nice pop. That's what happens really with all of these. Going back to even here. So, hope you understand. Hope that helps. And let's move on. Here's the manual trading systems for today. This is where I'm talking about the markets are just, they're banging and to the upside. So, but get ready, because that just means eventually they're going to roll over, and it's going to be painful for a lot of people with 401ks and whatnot. So, uh, hopefully it won't be blood in the streets. We do have a future cloud that is still positive, so I think whatever pullbacks we get will feel bad. But this uptrend, it looks like it's going for a while. We have to take out a pivot way down here to reverse this. And this is I've got all the instruments added together, so yeah. All right. So today the S&P 500 went up 30 points, or half a percent, 0.55. The Russell is nicely shooting higher. I couldn't help myself. I took a little profit off one of my option positions in the IWM today because it was up over 50%. And if I think this thing will pull back, a lot of times what happens, and let's look at IWM just so we've got it. So the Russell today went actually up 1.09%, or 23 points, but if we put in the IWM, which is a tradable ETF, so when we break out of a triangle like this, it's really common to pull back and retest, which would give me another chance to enter or look for an entry anyway. You can't. I don't want to just blindly enter when it hits that, because I also know that it's real common to come back to the 50% line or to the 21 period moving average, which is the orange line. And for this, all the momentum indicators to get at least on the midline here to get oversold, at least back to the zero or to the halfway point. This one would go to the zero or even deeper like this and come back up again. This is the kind of thing where when it pulls back, I want to get back in when it's back on the uptrend. And since we're in a squeeze, for what it's worth, if you go back on and look at squeezes like this that fire, it's like 1-2 days of big time upside happen, and then this thing will stay light blue while the price actually does pull back in before it releases again. And there's typically, after a squeeze, like 6 to 8 bars on a daily chart that it'll go light blue. That doesn't mean that it's always just up, straight up. It like I say, it's gonna vacillate a little bit back down and then back up again. And for certain traders, they'll be looking for that pullback so they can get in after a squeeze, and after a squeeze releases, I should say, to be able to ride it up. So I do have this target over here on the monthly chart, which actually is also transposed on the daily, which is quite a ways away. I think this thing is going to have some legs, not to mention this is the end of the week, and we do have a weekly squeeze fired signal on the weekly chart on the momentum indicator. So, or the true momentum indicator anyway. And so that's going to be something. I think this thing's going to have some legs. But I am going to look for another entry after. I mean, there was no reason. My philosophy personally is if I get make 50% on an option, I like to take some off the table and then let it go to 100, and then if I got a third one, I let it go on until I get its sell signal. That's just the way I do it, and it does serve me pretty well. So, all right, that is the Russell, which is pretty neat, because not to mention the Russell, by the way, is small cap stocks, and I've talked about it before. Small caps are harder for the institutions to get in and get out of, and the fact that if they're buying, then that means that it's kind of like risk off. They're looking at the world like it doesn't have a lot of risk right now, which is interesting, and you can't let that get in the way of whatever you think. It doesn't matter. At the end of the day, it matters which direction momentum's going, and price. So, all right, that's the Russell. The Dow. Actually, I think the Dow landed at 40,000. Let's look at the actual Dow chart here. So the closing price of the Dow today was 40,257. No, it's not. It's 40,000 even, 0.9. 40,000.9. I mean, like right on the button. So the high of the Dow at this point is 40,257. That's the actual index chart. There's a saying in the markets that there's no such thing as a triple top, and I'm sitting here looking at, if we pull this across, what looks like a triple top. So double tops tend to pull back like this one did. Now we've come back up, and again, it's just a saying, so you can only take it so far, but there's no such thing as a triple top to me. And this one, I kind of see the potential for this thing to go further because of it. this the candle finished above this level, and looks like it's got some further potential to me. So, all right. We've also got targets up here well beyond where we're at. And I could draw in Fibonacci's and we could come up with a 1272 and a 1618 extension as well. So, all right, that's the Dow, and this is the futures for the Dow. Looks pretty much the same. I hate that it's not letting me have on balance volume for the futures contracts, but that's okay. The Nasdaq continues to power forward, although we did have the pullback yesterday. So a little bounce. I wouldn't call it a dead cat bounce, but it's a little bit like that. Bounce after a big down day, really common. And then I think we're going to probably see some follow through to the downside here on the Nasdaq, but just based on it's the one. Everything else is trying to catch up to the Nasdaq from the way I see it. So, and the Nasdaq's probably got a ton of players in it that are just going to get taken behind the woodshed. That is a very interesting stat right there. The Nasdaq in 10 years, 100% of the time makes an average of 4.63%. So the way that thing's put together is it literally counts the gains every year inside of however long you set this for. I have 10 years. Adds them all together, divides by 10, or divides by however many months years you have there, and does that math for you. And 100%. That's a big. So maybe this thing won't pull back that hard. Maybe it'll continue to go up with the rest of the markets. I mean, you can't totally bank on seasonality, but holy cow, you can a lot. So the Nasdaq today went up 115 points, 0.63%. Let's look at the actual Nasdaq itself. And so July here has, I mean, if you use the actual Nasdaq instead of the futures, 90% of the time for 3.81. So it's pretty close to the same stat, which it should be. And let's look at the QQQ just to see for fun. We get the same kind of stat there. Yeah, 100% of the time at 4.64%. So July is a strong, stinking month to be long in the Nasdaq, is the way I see that. So, which isn't really surprising. All right, that's the general markets. The IYT actually broke higher today. It's throwing a buy signal. However, it's one against these moving averages that is at least suspect, and our future cloud is negative, although it's starting to think about going positive. So, and it's in a squeeze. So this is if we look here at the monthly chart, we've pulled back to all these averages. And we're gray. There's a chance this thing's going to make a play for the end of the month to become a new bullish trade or trend after this bullish rally and then this pullback. So we got bullish momentum going on down here, pretty good. And yeah, might be over here as well for the daily. So there's a lot really going on here, and you know, a lot of people like to think about, well, why is the market doing what it's doing? And really, that's something that I let go a long time ago. It doesn't matter. You trade what you get, not what you want. All right, oil today, it's down. That's interesting because at one point it was nicely up. So I do still think it's going to be fine, but if it's not, I'll get out when the time comes. And what do we got? Gold. Gold is going higher without me, which is fine. It's not really going higher. It hasn't broken out yet. That is a cluster of zigzag pattern to try to trade there, but gold is generally, or has been lately, a harbor of safety. So it doesn't feel safe up there to me, but yeah, that's where people put their money when they get scared of the rest of the markets. Um, and you can also see we're 6 bars bullish after the squeeze fired. So we'll see what happens in the next couple 3 bars. And this, for what it's worth, I opened up and went ahead and put a 3 average true range on my Keltner channels just to know where it is, because in so many cases it comes down, breaks the 2, and then rallies back. And I just kind of want to know that, especially along with my uh, bullish and bearish indicators that I got going on. So not to try to confuse people. I know it's a lot of lines, but um, it's really to help clarify things for me. So what else we got? TLT for bonds, and I do have one other, just kind of an example of a lesson here. Bonds are, man, TLT really wants to try to reverse itself, and it's going to be interesting to see when it does. It could be a great trade and a great reversal when it does. And if you were watching me last month, I tried to take that reversal early. I don't think I'll be doing that again. No promises though. If I get a good signal on a daily chart, I just might. So, because I tend to be an early and aggressive trader going in, and as long as I take my lumps when I need to, it usually pays off eventually. So, all right. My lesson to be learned here is this AMH trade down here. I'm highlighting it on the left over here. So, and I've got this other algorithm, which is really what it is, that colors these boxes when the signals all, if all the signals like AAT here are up and going, you know, bullishly, it says up, 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 and it's all green. You can't see it's green now, but it was. ARKF here is a new trade for me today, and it's up, up, up. I'm going to go flip this back. The ARKF's the one I'm showing you here. It's actually got a buy signal. One of my buy signals is why that changes to a different color of green. So there's a couple of different buy signals going on the actual chart today that's making that happen. And it's nice to be able, for me to be able to look down a list of, like, plenty of options for being able, or choices I should say, to be able to get into a stock with a signal, so that I don't have to think very hard. Like Best Buy here is, I'm already in it, but it's throwing a new signal today, um, which is actually gave me a chance to be an add-on signal. So that's not the lesson I'm trying to get at. What I'm getting at is this AMH is a long trade for me, and it's all down. So that's what I'm trying to show. And so let's go to AMH. It's a long trade for me. Over here on the monthly chart, it was nicely green and building I think a triangle breakout pattern, and it still might be. But we have earnings coming up on 8/1, which is still a ways away, and a lot of backward chop. And this thing has been actually a really good trade at one point in time here a couple days ago, and then it's given all this back in the last 2 days. Now the question is, what do you do with it? What do I do with it? And after one big red down move here, I could have just set my stop below that bar and been done with it. And in hindsight, maybe I should have, because it cost me a little bit more today. But here's what I do is after 2 days, I'm going to set my stop underneath there. And it happens to coincide with this particular one right at the Ichimoku cloud, right um, at the gold line of the Harvard line, the not the top gold ones, but the yellow line, because I've changed this thing to show some direction instead of just being blue, um, or green or whatever it was before. So uh, I'm going to set my stop. I'm probably not going to put it right under the candle. I'm probably going to put it down in this neighborhood somewhere right in here, maybe right at the 2 ATR stop, which would definitely be a stop out if it comes down to it. If it doesn't, then what I'm relying on is the bullishness of this indicator, which is really a version of the Simple 30 system that I've shown plenty of times, and then the 21 EMA, which happens to be in the right direction, and the 34 EMA, which is in the right direction, the 50 and the 100, they're all stacked in the right way to still be positive, to still be a bullish trade. We've just gotten a pullback here, but I don't want to just let it go forever to get stopped out or to take a hit. I could just put my stop here underneath this pivot and be done with it. I'm just thinking out loud a little bit, but I am going to put my stop like right up here. At the moment, I think it's all the way over here. It is. It's all the way at this pivot over here. So I'm going to tighten my stop to here, or tighten my stop up to here even. And literally, I could just tighten it to there and just let it get me out. And then whenever I get a chance to get back in, which would be when the candles turn green and then start to really rise again, or I get some bullish indication like some of these buy signals that are along the way here, I could just get back in. You can always get back in. That's kind of a lesson. You don't have to take a hit, but in this case, I'm willing to take probably a little bit more risk just because, well, for that matter, we can look at my analyzer tab. I'm down $648 on this trade. It's not the end of the world. I got plenty of other trades that are making up the difference at the moment. So, and we also have this break of structure right here, and we've done a pullback to about the mid-range of that. So, given a little bit more room, we'll give it a chance if it's going to go back up. If it's going to break the cloud and these other things, then I do want to just be out. And besides that, we do have earnings coming up here. I probably won't even think about getting back in again if I do that, based on the fact that earnings are there. So, all right, that's my lesson. Hope it helps. I'm moving on to the bullish percent indexes, and we're going to get out of here and have a great weekend. So, all right, the industrials went up 5.26% today. That's a tell. The NYA flipped to a new column of X's and went up 5.84%. That's a big time move. That's something that, Monday I think we'll get some follow through, and then Tuesday we'll probably get a drawdown. It could all happen inside of Monday, but that could be a place where you can, well, I'm going to remain long for a bit, generally speaking, and overall. The transports totally flipped. That's up 11%. So this is a big deal. The Nasdaq up 2.64%. The S&P 500 flipped over to a new column of X's and up 6.64%. The S&P 100 up 4.92%. The Nasdaq 100 up 5.17%. So big time bullishness coming back into the markets. Not that it's not been bullish anyway, but it kind of takes away some of the mistrust of this uptrend for me. So that's what I got, guys. Hope everybody has a great weekend, and until next time, take care. We'll talk to you later.